In this video, we'll be taking a look at future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like professional, check out the complete Forex trading course on Udemy. I have the link attached in the description below as well. So, in this video, we're taking a look at gold, crude oil, Bitcoin, GBP-USD, and EUR-USD. And trust me, I think there are a lot of good trade opportunities coming up this week. So please pay attention. If you're interested in any specific chart, use the timestamp below to navigate through this video. So starting with gold chart on the 2 hours time frame, I've slightly adjusted my lines based off of the price action we can see today as a result of our analysis from last week. So what you can see is a symmetrical triangle, and just a quick review of what we did last week. Last week we drew our trend line from these levels and anticipated a bearish move if price failed to break through this trend line, and that's exactly what happened. You can see we got a breakout from this pattern. So zooming in a little, you can see we talked about how price could go down, consolidate a little around these price levels, and get a breakout. So if you go to the 1 hour time frame, for example, you will see that that's exactly what happened. And if you went short after that breakout, this would give you approximately, let's see, approximately 400 pips, as the case may be right now. So that's a brief outlook from last week's setup. But right now, patterns has changed, so price action has changed, and I am not taking a look at these lines for my new analysis, right? So this aligns perfectly well with the current setup we can see. So a clean symmetrical triangle after breaking out from this area of value. And what I expect right now from gold is for us to come all the way down to these lows, consolidate, then either go up for a bearish move or go down for a bullish move, or go down for a bearish breakout or bearish decline to the downside. Now, we're going to be focusing on what's happening over here for us to see if we can spot a good trade opportunities for the week ahead or for this current week. And if you zoom in, you can see that we seem to be chopping a bit sideways, slightly to the downside, but there's no clear indication as to where to go short, how to get into this trade, or take advantage of the price action we can see on chart. But for me, I think the best way, best case for a simple or slightly risk adjusted price entry, if you want to go short, you could go short right now, or possibly if we take out these lows, right? So right now there's a bit of a support level over here. So I'm just going to draw this. So there's a bit of a support level over here right now, as you can see on the chart. And to go short, I would wait for us to break through this level. So a good close below would give you a confirmation to go short. And if this happens, your stop loss can be placed above these highs, and your take profit target just at this trend line, right? The lower bounds of the symmetrical triangle. But the reason why I wouldn't be doing this is because the risk to reward ratio for me isn't worth it, right? Because if you take a measured price movement, entering here will give you a potential take profit of 200 pips and stop loss of approximately 200 pips. So 1-to-1. So if that's something you are excited about, a 1-to-1 on gold, then by all means, this is something you can take advantage of if we do get a candle close below this area of support. If not, I think the best case, the best course of action should be being patient, wait to see what market does. Possibly, we could even get a bounce from here, going higher, who knows. But what I'm watching out for is to see how price reacts to this price level, right? Since it's a tightly closed area of value within the symmetrical triangle, I'm going to wait to see if price comes here, consolidates, and then see if we get a bullish breakout or a bearish breakout, in which case I'm going to go either long or short. So if we do get a bearish breakout from this symmetrical triangle, then I'm going to go short immediately after the breakout following the consolidation. My stop loss will be placed above the consolidation listed breakout, and my take profit target obviously is going to be placed inside or within this area of value. This is how I'm going to go short on gold right now with the current setup, right? While for a long trade position or long trade opportunity, what I'm going to do is watch out to see if we get a bounce off of these lows and if we do get a breakout from this trend line. So right now we have one bounce, we have another one here. So most likely if we touch the lower bound of the symmetrical triangle, we are going to get a consolidation, and we're eventually going to take out this trend line if price chooses to go higher. And if that happens, my entry is going to be after the breakout. Stop loss can easily be placed underneath the consolidation at least a breakout, which will be underneath the lower bounds of the symmetrical triangle. Take profit target would be the higher bounds of the symmetrical triangle around this highest, and this will give you a risk to reward ratio of approximately, let's see, stop loss 200 pips, take profit approximately 500 to 600 pips, 600 pips as the case may be, which looks decent in my opinion, which is a risk to reward ratio of 1 to 3. This is how I'm going to trade gold at the moment, right? So the only exception to this setup or this anticipation would be if, you know, gold should take out this trend line, so get a good bounce from here, consolidate a little, then continue going higher in continuation of the overall bullish trend. If this happens, then my entry is going to be after the breakout from this consolidation. That's if we bounce off this area value. Stop loss will be placed underneath this area value or underneath this one here, and first take profit target is going to be placed around the higher bounds of the symmetrical triangle, and the second one I'm going to trail it as we go higher. So this is my best case scenario for gold. If you agree with me, leave your thoughts in the comment section below. If you disagree with me, also leave your thoughts in the comment section below so I can, you know, get to learn from your opinions. Moving on, we'll be talking about crude oil. So crude oil real quick. Last week we talked about the possibility of a breakout, and we did get that breakout, solid one, and kudos to you if you're able to take advantage of that breakout, right? So good breakout, we went short, stop loss was placed above these highs. Right now, two things are likely going to happen. We're either going to fall like a rock into this area of value where we get a consolidation followed by maybe another breakout or a bounce as the case may be, or we get a pullback. So a pullback retesting this area of value before we fall hard. So whichever happens depends on your risk to reward ratio, your risk management, and what you are willing to get yourself exposed to with regards to the potential profit side, right? So now for me, I think we are likely going to go lower, right? Going straight down into this area of value. So that's why I'm already on a short position on this trade, and my stop loss is placed above these highs, right? So my stop loss is currently placed above these highs, and I went short around here within a week, right? In continuation of the bearish move to the downside, aiming for this lows. So I have a good risk management. If I do get stopped here, no biggie. I'm simply going to wait for price to, you know, get into this area of value where I'm going to look for another opportunity to go short or long as the case may be. So if you intend to go short right now, I would suggest waiting for a slight pullback, because from current price levels to these highs gives you a decent, you know, amount of stop loss, which we are trying to avoid, right? Because you need a tighter risk to reward ratio. So if you intend to go short, right, I'll suggest waiting for a slight pullback, right, followed by a dump. So if you get a pullback, then you could go short, which will give you a tight stop loss of approximately 80 pips with a take profit target of around 300 pips. So this is a risk to reward ratio of 1 to 4, which looks decent in my opinion, you know, rather than, you know, just jumping on the trade right now. That's a bearish case scenario for crude oil right now. If you want to go aggressive, then if you want to be more conservative, I'm going to wait for a consolidation and a potential breakout aiming for this area of value, right? Maybe followed by a dump or a move to the upside as case may be. So if this happens, your entry want to be placed above the breakout from this trend line, which will mean stop loss will be placed underneath the consolidation leads to the breakout or the pullback that leads to the breakout, and take profit target into this area of value. This will give you a risk to reward ratio of approximately, let's see, stop loss of 60 pips and take profit target of 150 pips. So still a risk to reward ratio of 1 to 3, close to as the case may be. So this is how I'm going to trade crude oil. You know, it's all about being conservative or being aggressive. So if you choose to be aggressive or to go aggressively, then you could go short with a tighter stop loss aiming for these lows. If you choose to be more conservative, you could watch out to see what happens. So that means price could fall like a rock and you miss trade opportunity, which is totally fine. There are always going to be more trade opportunities along the way. Or we get a breakout from this trend line over here, so which would eventually, right, so if we do get a reversal going up, so this would turn into an inverse head and shoulder, So it's not a confirmed inverse head and shoulder yet, not until we take out this neckline. But if that happens, then I'm going to be stopped out. I'm going to get more patience, waiting to see if price gets into this area value. Then I reevaluate and take trade accordingly. Or you could choose to go aggressively and go short now, or after a slight pullback to the upside, aiming for these lows. So it's up to you, depends on your risk management, your risk tolerance, and what you're willing to risk for this setup. So for me, I'm already on a short position because I do believe we are likely going to go lower in continuation of this bearish move following the breakout from this area value. If I'm wrong, it gets stopped out here, 80 pips, no biggie. I'm going to wait for price to get into this area of value, then I reevaluate to see if I'm going short or long. But for you can go more conservatively, see if we take out this trend line for a retest before you go short, as case may be. So it's up to you and your risk management, right? That's it briefly for crude oil. Moving on, we're going to be talking about Bitcoin. So Bitcoin, last week we talked about the possibility of price going higher, and that happened. I think price was around this place, and we had a move to the upside of approximately 400 pips. If you took advantage of that, good for you. And we got a pullback, another move to the upside. Right now, another pullback. So I do think I'm kind of bullish on Bitcoin at the moment. I may be wrong, but just following my setup, and I'm going to stick with it as long as the chart remains like this. Otherwise, price is going to hit my stop loss. No biggie. We move on, find more trade opportunities, and I'm going to explain my thought process right now. So at the moment, you can see the setup. So this is a bullish move to the upside, a good consolidation. So this is a bullish flag, bullish continuation pattern followed by a bullish breakout. And now we seem to be having a pullback, which usually leads to a continuation of the bullish move. So the reason why I'm bullish is because if you pull up the Fibonacci retracement 2, right? So you pull up the Fib 2, this is the 1 hour time frame, mind you. If you pull up the Fib 2, taking into account this movement, measured price movement, you would notice that we just got a bounce off the 61.8% Fibonacci retracement zone. So this is a very solid area of value for a bounce in continuation of a bullish trend or a bullish move, right? So you can see bullish move, retracement into the 61.8% level. We got a good bounce, and to top that up, we had a bullish divergence. So you can see price created a lower low, so this low is lower than this low, so lower low on the price action, but ROXI gave us a slightly higher low, right? So you can see this low higher than this one. So this is a classic bullish divergence on the 1 hour time frame, followed by a bounce of the 61.8% Fibonacci retracement zone. So this is good enough confluence for me to go long. Meanwhile, we took out this consolidation, so we had a breakout from this pattern right over here, right, which seems like a falling wedge with a bullish breakout. And right now I'm long on Bitcoin. So if you have a good risk to reward ratio, a good risk management, excuse me, you could go long at current price levels. Stop loss will be placed underneath the 61.8% Fib level, according to what you can see on the chart, which will give you a stop loss of approximately 160 pips, depending on when this video gets out. Take profit targets could be placed around these highs. So this will give you a risk to reward ratio of, let's see. So if stop loss is 150 pips, take profit can be as high as 400 pips, which gives you a risk to reward ratio of 1 to 3 as the case may be, right? And you can trade the rest of positions to go higher, because I do think Bitcoin is going all the way up to approximately 125,000, 130, 150 as the case may be, right? So I think this is a good opportunity for a bullish trade, in my opinion, and I wouldn't mind even if price gets reversed and going to clear out my stop loss. It's totally fine, totally normal. We'll reevaluate, use good risk management, and move on with other trade setups. So this is how I'm going to trade Bitcoin right now. I have no bearish case scenario for you, because I don't see any logical reason why I want to go short, right? So that's why I don't want to even consider the bearish case scenario. For you could do your own analysis, follow your own setup. If you see a bearish case scenario, by all means go short. But for me, this is good enough confluence for me to go long, and I'm sticking with this setup. That's it briefly for Bitcoin. Moving on, we're talking about GBP-USD. So GBP-USD on the 2 hours time frame, we've been talking about this for quite some time, And this did present us with a very good trade opportunity. Last week, I think we were around this price level. I talked about the possibility of a consolidation with a pullback, and I told you to be careful if you drew a trend line like this anticipating a bearish breakout, right? I remember I told you about this, and if you went short, you would have gotten smoked out from the market. Meanwhile, we had that pullback consolidation followed by a good breakout to the upside. Right now, we're trading around a solid area of resistance. The only logical course of action right now, as you can see, GBP-USD is extremely bullish, would be waiting for a breakout from this area of value. So that would be waiting for more consolidation, followed by a bullish breakout to the upside. If this happens, your entry want to be above the breakout from this area of resistance. Stop loss should be placed underneath the consolidation listed breakout or underneath these lows. Take profit target, first one should be placed around its highs while you trail the rest of the positions as we go higher, because this bullish trend is still very much intact from what I can see on chart. So the only reason why this doesn't work is if we fail to break out from this area of resistance, or we get a fake out, for example, then we get rejected back down into this zone, right? So this will be the only reason why I will call this trend line possibly invalidated. But for now, the bullish trend still intact, and the only possible or logical course of action would be to, go long when we take out this area of resistance, and that's what I'm going to do if I was trading currency pairs. Remember, I don't trade currency pairs. I do this for those who do trade currency pairs. So I have an alert here placed just in case I change my mind. Well, I don't think I will, but I still want to get notified by TradingView if we do get a breakout above this area of resistance. So something to pay attention to this week, and make sure you take advantage of this trade opportunity if we do get that bullish breakout to the upside. That's it briefly for GBP-USD. Lastly, we're going to be talking about EUR-USD. So we haven't analyzed EUR-USD for a while. Trend is still bullish. 1 hour chart, of course, you can see higher highs, higher lows, and we had this huge consolidation over here. Right now, I think price is gearing towards breaking out from this trend line, or this area of value, area of resistance, whatever you want to call it. And I'll be watching out for a small consolidation at its price levels, followed by a bullish breakout to the upside. If this happens, you want to go long immediately after we take out this trend line. Stop loss can be placed underneath the lows of the consolidation listed breakout, or you could put your stop loss underneath lows to be safer, which gives you a tighter, wider stop loss, of course. That's where risk management comes in, depending on your risk tolerance. And take profit targets could be as high as these price levels for first take profit target, and you trade the rest of the positions as we go higher. I think this is clear enough. I don't see any reason why you want to go short. The only reason why you may consider going short would be, taking this trend line like this, right, and watching out to see if we get a, excuse me, I'm just going to zoom this in a little so it's clearly visible. Yeah, so the only reason why you probably going to consider going short would be, waiting for some consolidation within these price levels, followed by a bearish breakout. So if this happens, then this will give you a good opportunity to go short, but you still have to be careful because this is still a bullish trend. So any breakout from this trend line could easily be short-lived. So you could get something like this. So you could get something like this, pull back down, then a rip towards the upside going higher. Totally possible because it's a bullish trend. Bulls are still in control based off of the market structure. So you have to be careful with going short. But I do think the market will be in your favor if you play along with the trend. And that will be waiting for a bullish breakout above this trend line, aiming for these highs and trailing the rest of positions as we go higher. That's it briefly for this week's analysis. I hope this was helpful. If you disagree with me, please don't hesitate to leave your thoughts in the comment section down below. And if you're interested in learning trade first like professional, to learn to analyze the market like I do, professional style price action analysis, please don't hesitate to check out our complete Forex trading course on Udemy. I think it's going to help you a lot. That's it from me, guys, this week. See you next week.